U.S. Tax Filing Requirements for Expatriates in 2025 by SK Tax Associates. If you're a U.S. citizen or green card holder living abroad in 2025, you still have a legal obligation to file U.S. taxes. The United States is one of the few countries that taxes its citizens on worldwide income, regardless of where they reside. Here's a clear breakdown of what expatriates need to know about filing U.S. taxes in 2025. If you're a U.S. citizen or resident alien and your income exceeds the standard filing threshold, you must file a U.S. tax return, even if you live abroad. 2025 general filing thresholds: just as an estimate single, about $14,600, married filing jointly, around $29,200, and for those who are self-employed in any status, if you earn $400 or more. This includes income from foreign employment, freelance or business activities, rental property abroad, and foreign investments or pensions. While the regular United States tax deadline is April 15th, expatriates get an automatic 2-month extension until June 17, 2025, since June 15th falls on a Sunday. However, interest still accrues on any tax owed after April 15th. You may request Form 4868 for a further extension to October 15th. But, it's not automatic for expats. The tax deadline is April 15th, but expatriates get an automatic 2-month extension until June 17, 2025, since June 15th is a Sunday. However, interest still accrues on any tax owed after April 15th. You may request Form 4868 for a further extension to October 15th, but it's not automatic for expats. To prevent being taxed twice, once by your host country and again by the United States, you may qualify for some tax relief options. The Foreign Earned Income Exclusion, or FEIE, which is filed with Form 2555, lets you exclude up to about $126,500, that's the 2025 estimate, of foreign earned income. But you must meet either the bona fide residence test or the physical presence test, which means spending 330 days out of 12 months abroad. There's also the foreign tax credit, filed with Form 1116, where you can claim a credit for foreign income taxes paid. This is especially useful if you earn more than the FAIE limit or have unearned income. And don't forget about the foreign housing exclusion, which provides an additional deduction for qualified housing expenses incurred while living abroad. So, if your total foreign financial accounts exceed $10,000 at any point during the year, you have to file an FBAR, which is FinCEN Form 114, by April 15th. And there's an automatic extension to October 15th if you need it. Also, under FATCA or Form 8938, you need to report foreign financial assets over certain thresholds, starting at $200,000 for single filers living abroad. Failure to file your return, FBAR or FATCA forms can actually lead to some pretty severe penalties, even if you owe no tax at all. The IRS has become stricter in recent years, especially since foreign banks now report U.S. accounts under FATCA. Navigating U.S. taxes as an expatriate is definitely complex, but with the right guidance, you can stay compliant and avoid double taxation. Whether you're working, retiring, or freelancing abroad, it's just not worth risking hefty penalties by ignoring your filing duties. SK Tax Associates helps U.S. expats worldwide stay on top of their tax obligations. Let our experts simplify the process and make sure you maximize exclusions and credits. Contact us today for a free consultation on U.S. tax filing for expatriates in 2025.